What is going on, my friends, and welcome back to another video on the channel. On today's video, we are going over Luna Classic as it has finally made a move that we have been looking for about an entire month. So with that said, let's not waste any more time at all, and let's get straight into today's video. Now, looking at Luna Classic, for the last month, we had been tracking this consistent downtrend. I really slowed down on uploading, I slowed down on posting, and I just told you guys, I'm simply just waiting for us to break this line. Once we break this line, we'll be in position to make some moves, but until then, we are just going to keep going down. I said there's no point in consistently buying and buying and buying when we are in a steady downtrend. Be on the lookout for this downtrend to break before doing any big purchases. I thought that was the best idea, and now here we are. Well, as you can see, over the last couple of days, we were attempting to finally see the breakout, in which we got a bit of a fake out here, but a back testing of support, and then the eventual full-blown breakout here, which does now show that we have now done it, and we have broken from this trend line that realistically we've been under since September, almost 2 months straight now of consistent declines. So what happens next? Okay, well, we can't just start screaming and shouting, just seeing that, oh, this thing is going straight up to a dollar or whatever people say. That's not the case, right? But we are in a better position to see some growth, and let me tell you why. So looking at this thing, there's a couple things that tell me, okay, we're probably in a situation in which we could come revisit, back up towards the 30s and optimally back up towards the 40s. First and foremost, we have seen this bounce happen off of the 618 to 786 macro Fibonacci zone. What you can see is from this low up to this high, we retrace all the way back to this little golden pocket, the 618 to 786 macro Fibonacci level. And typically speaking, when we bounce off of this level, we have a high tendency to be able to revisit the top side of the range, or in this case, around 37. This is your bounce level. This is the level where you are the most likely to see a bounce. If it fails here, you're usually going to see a hard correction. But if it succeeds, you're usually going to see a hard push to the upside. So that's always a good sign. Not only that, though, on the macro sense, you can see that on our daily RSI, we are getting a beautiful drive of low, higher low, low, lower low. That is a beautiful drive of bullish divergence, which tells us that these charts are resetting and that this RSI has reset much faster than the price itself, meaning that the bulls are now taking back in control. And although the bears did succeed in pulling the price down, they were not capable of equaling that with the RSI, just going to show that we could be in a position to see a bounce to the upside relatively soon. Now, if we do get rid of all of this good old stuff and we look at the Bollinger Bands, we are also seeing that we did fully extend to the bottom side of our daily Bollinger Bands here and are now revisiting this 20 SMA. Usually whenever we break the 20 SMA, we're in a position to see some growth back towards the top side of these Bollinger Bands, currently sitting around the 30 level. And so for all of these reasons, things are looking relatively good to say that we could get a bounce here if we are capable of breaking 25.5. Now, let's talk about, why is this important? Okay, why is 25.5 so important? I was going to talk about the daily Bollinger Bands, but we could talk about that in another video. I want to talk about why 25.5 is so important. Well, one thing that I know is that whenever we break out of these macro downtrends, let me get rid of this Fibonacci for now. Whenever we break these macro Fibonacci, or these macro downtrends, what happens is that the points in which we touched the trend line, or this white line, right here, here, and here, are now your breakout targets. Whenever you break up through this line, these are the levels that you are the most likely to see some resistance at. You go up to them, then you'll probably get rejected. But if you break it, you're probably going up to the next one. Then you get rejected. You break it, you go to the next one, get rejected. You break it, you go to the next one, get rejected. And then if you can clear all of your most recent ones, then you're in a position to really see some growth. So what that tells us is that every time we first of all start with 25, then we're going to hit 27, then we're going to hit 29, and then we're going to start looking for the retracement up to 30, yeah, let's call it 30. And then we're looking at 31, okay? So this tells us that these are the levels now. These are the tests. These are going to be the moments in which we need to see the bull step in. And if we are capable of clearing all of these recent little breakout targets right here, we are in a position to beautifully see some growth towards the top side. I'm under the belief that it always starts with step number one. Step number one right now comes with us breaking 25.5. You can see support, resistance, support, 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 resistance, We can even look a little bit here. We had a bit of consolidation here. This was the support establishment there. We have established a lot of support and resistance on this 25.5 level. And as we are getting rejected off of it right now with some type of double top, you need to pay attention to it. I believe if we break this 25.5 level, we could be in position to see some growth and maybe even us starting to, act out on this daily RSI bullish divergence in which we're seeing. And so for that reason, I'm under the belief that the next major step for us right now is breaking 25.5. If that happens, I think, likelihood is we start to see some type of growth back up, maybe another 7% towards 27, then to 29, to 30, to 31, and then everything looks much better once we're finally capable of breaking the 31 level. So what I would be doing right now, if I'm trying to figure out when am I buying, when am I shorting, when am I longing, is I'm basing it off of all of these levels. Again, we have 25.5, 27, 29, 30, and 31. These are your levels of importance right now, okay? If you're looking to go long on a macro sense, I would be waiting for us to clear all of them. Let it get through all of this resistance. Let it break all of these obstacles. Maybe have a bit of a pullback, something like that. Boom. And then we finally get the breakout. And then somewhere around here looks like the much, much, much more appealing level to be getting in when we won't have all of these obstacles in our way. That's the long-term play. The short-term play is looking for this thing to break these levels, okay? So the biggest thing right now is to not get too far ahead of ourselves. We can't say, oh, we're going straight up. Oh, we're going to 50. Oh, we're going to 60. Oh, we're going to knock off a 0. We're not doing any of that until we clear these levels and we break 31. Once we break 31, then we can start to be a little bit more optimistic. But until then, I am very happy that we've made this progress. We've broken the trend, but now things get even more difficult as we have all of these obstacles in front of us. And I will continue to update you as we do approach each and every one of them. So with that said, that is about it for today's Luna Classic video. And of course, I hope you guys did enjoy. If you did, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all very, very soon. Peace.